Financial aggregates. Data for the levels of financial aggregates are not adjusted for series breaks, and growth rates should not be calculated from data on the levels of credit. Historical levels and growth rates for the financial aggregates have been revised owing to the resubmission of data by some financial intermediaries, the re-estimation of seasonal factors, and the incorporation of securitization data. The RBA credit aggregates measure credit provided by financial institutions operating domestically. They do not capture cross-border or non-intermediated lending.
Central banks across Europe pause for breath after mammoth rate hike run, but face triple dilemma. The Bank of England and Swiss National Bank held interest rates steady this month, while the European Central Bank opted for a dovish hike, and Sweden and Norway's central banks indicated just one more increase may be ahead. Bonds and bullion purged as crude and king dollar surge into quarter end. For the third day in a row, the machines tried, and failed, to ignite a short squeeze early on. But around 1400 ET, something snapped and the squeeze was in and equity markets went vertical. But the ignited momentum ran out of steam quite quickly. The late-day squeeze-gasm lifted everything green, even the Dow briefly, but as the squeeze ran out of ammo, so did the rally. The Dow was red, S&P unch, Nasdaq very modestly higher and small caps solidly higher. But we are seeing multiple sigma moves across multiple markets now, with Bitcoin, yields, and gold all swinging violently as the dollar and crude just keep surging. Treasuries were clubbed like a baby seal again today, with whole curve up 6 to 9 basis points, with 10Y blowing out above 4.60%. Australia warns of impact if China suffers sharper slowdown. The impact of a deeper economic deterioration in China will be mainly felt in Australia through weaker trade and reduced risk appetite in financial markets, Australian regulators said in a quarterly statement. Australia, NZ dollars undone by risk aversion, jobs data. Sydney, October 19, Reuters. The Australian and New Zealand dollars were again burdened by global risk aversion on Thursday as tensions in the Middle East simmered, while domestic jobs data proved too mixed to offer any support. Bonds also took a beating as treasuries extended their recent sell-off, sending Australian 10-year yields AU10 EAT equals RR to the highest since mid-2011 at 4.76%. Yen rises on speculation of BOJ policy tweak, dollar ebbs. The yen hovered near a two-week high on Tuesday, boosted by a report that the Bank of Japan, BOJ, could further tweak a key bond yield policy tool when it announces its monetary decision later in the day. Thank you.